Video, we're going to be going over how you would complete your form W-4P withholding certificate for pension or annuity payments based on a question asked from one of our readers. So this person asked how you would complete this form if you had a pension and Social Security. So before we dive into this form, I would like to take a step back and just kind of give a broad overview and my perspective on how you should look at withholding taxes throughout the year. So the first thing you should do is really have a good understanding of all of your sources of income, and then all of the ways that you could withhold taxes on that income. So that could be W-4 if you have a job or if your spouse has a job. That could be W-4P. That could be W-4V, which would be used for taxable for Social Security. You don't have to use this. It would be W-4R for periodic or non-periodic pension payments. So the W-4R would be if you had an IRA and you occasionally took out distributions, but not always. So, but with this one is the withholding certificate for regular recurring income. So, once you have a handle on that, then you should be deliberate about which ones you're going to make changes to. Sometimes I get questions from people who make an adjustment to, they try to make a lot of tiny adjustments to each one of these forms that might pertain to their situation. So that might introduce a lot of complexity and confusion. And at the end of the day, the IRS only cares when they're looking at your household. They don't really care whose income is getting what taxes withheld. They just care that your entire household as a unit is paying the right amount of taxes through whatever means. And to be honest, if you decided that you didn't want to file any form W-4s, or if you wanted to just zero everything out and you just paid your estimated taxes online on a periodic basis as you earn your income throughout the year, the IRS would be just as okay with that as they would if you decided to withhold everything on one, type of W-4. So, in the big picture, these forms are designed so that you adjust your withholding. For example, if you had two pensions, then you would adjust your W-4P withholding on the biggest of the two pensions, and then you would kind of leave the other one alone. So let's kind of take a closer look at this W-4P. So we went ahead and pre-filled this top of the form out. I won't go through that. We've created another tutorial that goes through this detail. So what you can adjust steps 2 through 4, right? So you could put all of this information in. What I would recommend is taking a look at your your most recently filed W-4 for this source of income. So first of all, every time you file a W-4, you should keep a copy of it just so that if you have to make adjustments in the future, you know what you're making adjustments from. So if you don't keep your form W-4, then it's like starting over from a new slate every single time. And that does no one any good if every time you do something very similar or something drastically different and you don't know how to make that adjustment because you don't have a perspective on where to tweak that withholding. So if you have your previous filed form W-4P, maybe you kind of just outline everything in a similar manner as here, and you just get down to the bottom and you're like, hey, I just need to, withhold an extra $100 a month. Boom. There you go. That could be as simple as that on any of your Form W-4s. You could just say, I want an extra $100 a month because my last tax bill came in I owed $1,500. So I'm just going to do everything that I did last year. If I withhold $100 a month, then next year, same income, I should get to within about $300 or so, right? Like that. That's perfectly acceptable. You could also just say, you know what? I'm going to take $1,000 of my tax return, my tax refund if I get one, and I'm going to apply it to next year, or I'll go onto the IRS website and type, pay $1,000, whichever way you feel comfortable. But to answer this person's question, what I would take a closer look at if I knew nothing about my prior W-4 is I would strongly consider using the tax estimator. We'll put a link in the show notes on the video that we created walking through that. I would take a serious look at that and see if it worked for my tax situation. It might not work for everyone, particularly people who might work on commissions where your income is very irregular and not predictable. If you have self-employment income, if you have a good estimate of, what you brought in last year and what you expect to bring in next year, you should use the estimator. And to be honest, let's just imagine that you're still growing your self-employment business. Well, if you just your withholdings from last year, let's just say you made $20,000 last year, that you're in the 22% tax bracket. You expect maybe, to kind of roughly come in line this year. If your income starts increasing more and more, then you simply what I would do, apply extra withholdings to the additional income. Every time you get, quarterly, kind of run your quarterly statements, then I would just take 22 to 25%, maybe a little bit more if you felt like it. And I would just make an online payment to the IRS and just kind of get that out of the way. So that's how I would, approach it using this. But what you could do is just use that option, run through this for your most accurate withholding for steps 2, 3, and 4. So if you do that, that's fine. If you don't do that, then if you have a pension and your Social Security, what I would probably consider is just putting your pension income this is your pension income from other pensions that pay less annually. So this isn't where you would put your Social Security. You could do that. If you knew your taxable Social Security was there, you could put that there. What I might consider doing is going through steps 3 and 4. So you would complete steps 3 and 4. If this pension / annuity pays the most per year, then this is the part where I would focus on. So we're going to leave step 3 blank. We're going to assume in this situation, we're not qualifying for any of these tax credits. So what I would consider doing is taking a look at your other income. This might be where you decide to withhold your tax based on Social Security. So you simply would enter the amount of your taxable Social Security here. So let's say $20,000, right? If you wanted to claim deductions other than your basic standard deduction, you could use the deductions worksheet on page 3. You would enter the amount there. If you decided that you wanted to withhold a little bit of extra tax for some reason, then you would still pay attention to what additional tax from each payment. So, that this would look different if you got paid monthly versus semi-monthly or quarterly. So that's the way I would look at it is, first make sure that you are, taking a deliberate approach. So if you're making an adjustment to this, what I would not do is go back and start making changes to my W-4V on Social Security. I might do that down the line, but realistically, I want to see what change filing this W-4 has on my tax situation first. And it might take a couple of times to get it right. So the other consideration I would say is which office, are you handing this to, and are they responsive, more responsive? Do you get feedback? Can you communicate with them? So, turning in a W-4 at your HR department at work might be a lot easier than trying to, break through the bureaucracy of a large pension fund, or, getting frustrated when you don't get any feedback from Social Security. So I would take a little bit of consideration into the mechanics of which form would actually be easier for me to get quick feedback from, because I don't want to file this form and then find out that I'm not going to get my next statement for a couple of months. And then by then a bunch of changes occur that I hadn't anticipated. I would go with the withholding certificate that, that I can get the quickest response from. So I'm sorry, Miracle Love. This probably took a little bit longer than what you had expected, but to answer your question about, how I would make an adjustment to a W-4P with Social Security, I would put the Social Security here in this, or I would select the Social Security withholding on my Form W-4V. I would not do both. So if you have a W-4V in place and you report this Social Security income on W-4P, then you're probably going to err on the side of withholding too much tax. Now, does any of this hurt you in the long run? In the long run, if you pay too much tax, you're going to get your money back at the end of the tax season. So, this is February of 2024. So if you end up withholding too much taxes, well, you'll get your money back. It might be April of 2025, but you'll eventually get your money back when, once you file your income tax return. So, be very deliberate about your withholdings. Be deliberate about which source of income you're going to adjust your withholdings for, and be slower rather than quick to take the time to see the impact that these withholding changes have on your taxable income and on your estimated tax. So don't be so quick to fire off like multiple W-4s to different people, because you're not going to get that processed on the same timeline, and you're not going to get the feedback in the way that you think you should. So, if I was just going to make an adjustment based on my Social Security, I would take this form, no additional withholdings. I wouldn't make any adjustments for credits unless I was entitled to them. But I would just go down, I would add that Social Security income in line 4A. So that's all we have for this video. We did kind of discuss all the W-4s. I'll put links in the show notes to all the videos that we've done, the videos and the articles that we've done on the variety of W-4s that are out there. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our channel. And if you have any questions, comments, or if you'd like for me to discuss a topic in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.